Welcome back to the Maze Dive, the Sunday edition of the Money Maze, where we grab one JSE stock making headlines and pull it apart like a chicken bunny chow. Messy on the outside, but properly satisfying when you get into it. I'm your host Jay, and today we're back with a company we covered about a year ago. African Rainbow Minerals, ticker ARI. That's Patrice Motsepe's mining house. Last time ARM was the sensible cousin at the braai. He brings his own chairs, drinks 2 beers and then leaves before the singing starts. Iron ore, manganese, a slice of Harmony gold and a dividend that actually shows up. Boring in a good way. Well, on the 23rd of July, the sensible cousin stood up and clapped the table. The board has signed off on a plan aimed at 2 mines the rest of the industry already gave up on. And the price tag is a number so big I'm going to make you wait for it. So today's question is simple. Counter-cyclical genius or a very expensive falling knife caught with both hands? Well, let's dive in. So, just a little background on who ARM is. Well, they're a diversified miner. Its engine room is ARM Ferrous, the iron ore and manganese joint venture that quietly prints cash while nobody claps. It also holds a chunk of Harmony gold. That mix made ARM the designated driver of the mining sector. Now the 2 mines. Bokoni is a platinum mine in Limpopo and ARM owns all of it, 100%. It got mothballed years back into care and maintenance, which is mining speak for switching off, but we still pay a guy to sweep up and keep the pigeons out. Then there's Nkomati. It's a nickel mine, also fully ARM owned, parked since 2021. ARM has just decided to flip both switches back on, and here's what it's going to cost. Bokoni gets a 15.2 billion rand, while Nkomati gets 753 million. Round it up and you've got about 16 billion. A number on its own means nothing, so let's reframe this. Market cap as the price tag on the whole shop. Share price times the number of shares. Mid-July, ARM was worth about 34.6 billion rand. So 16 billion against 34.6 billion company, that's about 46%. Nearly half the shop wheeled out back and buried in a hole on the promise it climbs back out worth more. That's putting the meat, the rolls, the chakalaka and the car keys on the same fire and lighting it. The sensible cousin isn't sipping his second beer anymore. He's ordered double brandy and asked who wants to arm wrestle. So before you panic, that 16 billion is not a one check. Bokoni is staged over about 7 years. A refurbished plant brings early production in 2028. A much bigger new concentrator only commissions in about 2030. And full steady state lands around 2032, aiming at 350 to 400,000 ounces of PGMs a year. Nkomati is going to be quicker, mining again by October, targeting 56,000 tons of nickel concentrate. With an offtake deal already signed with Swedish miner Boliden. Offtake means the buyer is lined up before you dig, so nobody's standing at the gate with a wheelbarrow of nickel hoping for interest. And here's why a restart is cheaper than a new mine. Greenfield is building from bare felt. Everything from scratch. Brownfield is restarting something that already exists, shafts, roads and plants sitting nearby. Bokoni and Nkomati are brownfield. You're not building the house, you're just getting the geyser working and chasing the spiders out. Now the wallet. Net cash means more in the bank than you owe, and ARM is sitting on about 9.5 billion of it at the end of June. They'll fund this from their own cash. Cash Bokoni throws off as it ramps up and a bit of debt. Crucially, no rights issue. That's when a company prints new shares and waters down everyone who already owns it, like topping up the punch bowl with tap water. ARM's not doing that, so your slice will stay the same size. But let's look at the bull and bear case. Bull first. This is a counter-cyclical bet, doing the opposite of the herd. Building when prices are low and everyone's scared. So you're producing when the crowd charges back in. It's buying the braai pack the day after the long weekend when it's marked down, not the day before. Platinum's had a rough few years, but the price is turning, up around 14% over the past year. While South African supply shrinks as old mines close, less supply, steady demand, and you're one of the few mad enough to switch a mine back on. Even Citi called it a good use of cash, and when a big serious bank nods along with a risk taker, well, it raises some eyebrows. Now let's turn the chop over. This side has teeth. There are 3 things worth worrying about. 1. This is a multi-year bet on a price ARM doesn't control. Bokoni produces nothing until 2028 and only hits steady state around 2032. That's a long time to stand at the fire insisting the coals are nearly ready. 2. The electric vehicle question. Loads of platinum demand comes from catalytic converters and EVs don't need them. The shift is moving at the speed of a home affairs queue, but it's moving. 3. Restarting old mines is never as smooth as the slide deck. Old shafts, tired plants, half the skilled oaks long gone to Perth. ARM has had a rough 2026, at one point shedding close to 2.9 billion in a single trading day. That's a lot to misplace between breakfast and lunch. So what's the take? Well, here's the frame if you hold ARM on easy equities or you're eyeing it. This is no longer the steady cousin with the folding chair. Management has turned it into a proper swing at the platinum and nickel recovery off a strong balance sheet. If platinum climbs into 2028 and beyond, masterstroke bought on special. If not, nearly half the company is tied up in mines that eat cash for years before they feed you back. Reassuring part? Well, no reckless debt and no diluting you to pay for it. Scary part? 7 years is a long time to be right about a metal price. Personally, I'd want to see Nkomati's October restart go cleanly before I fully believe the bigger Bokoni story. Neither the bull nor the bear is wrong yet. That's what makes it a real decision and not a coin toss. So your Stokvel starter pack for the JSE Jedi ARM edition. Your cheat sheet. On July 23rd, ARM approved about 16 billion, 15.2 billion for Bokoni and 753 million for Nkomati, both 100% ARM owned. Against a 34.6 billion market cap, that's nearly half the company going back into the ground. Bokoni is a brownfield restart, producing from 2028, new concentrator in 2030, steady state around 2035 at 350 to 400,000 ounces of PGMs a year. Nkomati mines again by October, targeting 56,000 tons of nickel concentrate with a Boliden offtake signed. Funded from about 9.5 billion net cash plus ramp-up cash and a bit of debt. No rights issue, no dilution. Bull case, counter-cyclical timing into a tightening market. Bear case, a 7-year bet on a price ARM doesn't control, the EV shift, and real execution risk. So basically the sensible cousin has left the folding chair by the fire, and somewhere around 2032 we'll find out if he can actually dance. So before you remortgage the house to chase Motsepe down a platinum shaft on the say-so of a man who budgets in braai metaphors, remember, this is not financial advice. Do your own research and speak to a licensed financial advisor. Catch you next Sunday on The Maze Dive.